In this video, learn how we think about risk in an A+ setup and the importance of controlled aggression in your trading. Hi, I'm Jeff Holden, Head of Recruiting at S&P Capital, a proprietary trading firm located in Midtown Manhattan, trading equities, options, and futures as automated and discretionary traders. In this video, we speak with a developing trader during an in-depth trade review on the importance of being aggressive when your A+ setup is presented, and specifically the importance of controlled aggression in order to remain within your allotted trading risk. Let's get to work on sharing this important trading lesson to help you grow your trading. So tell us who you are first.
My name is Preston. I'm from North Jersey. I attend George Washington University, and I started trading in April of 2019.
And how'd you find us?
I found S&B through just looking on YouTube. When I started out, I was just kind of looking to get some education, and S&B Capital, a lot of people that in chats that I was in and stuff talked about them, and they had a great reputation of turning traders into 6-7 figure consistently profitable traders.
That's great. Yeah, we're happy to have you. You're a junior intern now, kind of new, but you know, this was a cool trade to review, and so I'm glad you sent it over, and let's get into it. We'll talk about it today.
Yeah, for sure. So the trade I'll be reviewing is my SYMPATHY parabolic long trade on PHUN. So this trade was a SYMPATHY long trade with DWAC, and DWAC was a IPO that came out, started trading around $15, and it made a huge move up to $175. And basically, I noticed as DWAC was making a huge move one of the days that it was running in sympathy with PHUN due to the news catalyst that they were both affiliated with Trump. Yeah. So with that being said, there was a ton of major pre-market volume. There was obviously I had the news catalyst. There was a huge R-vol off the open, and then there was definitely an aggressive tape on the breakout. Some of the stuff that I was looking in for the trade as I executed it was that we were holding above some of the indicators, EMA, SMA, VWAP, and I also used that for entries and exits. With these huge move trades, the halts are definitely an issue. So to mitigate that, I wanted to make sure that we bounced hard on pullbacks, and I wanted to make sure that my average price was really low so that if we did halt, it wouldn't hurt me too bad. And also the overall sector, although sort of irrelevant, was showing strength that day. And obviously there was tons of buying pressure in the pre-market.
When did you start, particularly in fund, when did you start thinking, okay, this could be a trade that could be an A+ setup for me?
Yeah, so in my morning meetings, I was sort of looking for stuff that had volume. And PHUN had I think it was trading at 25 million volume. Around 8:50, 9 o'clock, it was just pushing. I think the day before that, it was at 90 cents. We opened up 700% up in pre-market, so it was a pretty huge move.
You know, a lot of what we talk about, particularly in new traders, is they're stocks that you can get involved with because they're predictable patterns and they're patterns that you've seen before. They're patterns that you know how to trade, you have a context around. Is this something that you had seen before, something that you had experienced before? Is this kind of within your wheelhouse as a trader?
Yeah, for sure. With AMC and GME, I had a lot of experience with these parabolic short squeeze moves, and this is definitely something that I've seen before, and it was something that had the potential to move a lot more than it did. Given that the all-time high actually on the 3-year was 550, yeah. So it could have definitely been pumped.
Yeah. Okay, great. Because when it comes to the A+ opportunities, there's this idea of you want to be aggressive, but you really have to control your aggression. you're walking into a situation where this could have down halted right off the open. This could have chopped around for an hour and then made a move. This could have done a lot of things. So you really want to make sure you're aggressive in an A+ setup, but it has to be in a very controlled way. And I think as we kind of talk through the trade a little bit, finding that those moments, letting those moments show up to have that controlled aggression can allow you to do what you kind of talked about, the things that you need to do. You have to get in from good prices, and then you have to maintain that controlled aggression because you can't be scaling out right away. If it's a big potential of a big trade, you can't be scaling out right away because then you're giving up the aggression that you worked so hard to kind of get. Controlled aggression is important, but it's really important to do that within your risk levels. Because if you're just aggressive to be aggressive, your risk levels aren't going to support that.
Right, and going back to what you were saying about being aggressive, but some of the stuff that could happen, downward halts, all that, which to mitigate that risk, I took a position actually in pre-market so that I felt a little bit better about it and I had a little bit of cushion on the trade already. And this trade definitely, speaking on being aggressive, this trade definitely, if executed well and with size, had the potential to make a month, if not by a professional, a year. So it definitely, yeah.
Yeah, and you want to recognize those moments and just let them show up. Because if you're predicting that moment, if the day before you were like, I think fund's going to go to $24, it's very easy to overthink that and get yourself caught in traps, and if it doesn't do exactly what it did, put yourself in a tough position. But if you're like, this has the potential, let me just let it show up. You're comfortable with your playbook. Your playbook includes maybe getting long pre-market if the right situation presents itself. It includes adding to the position that when it's working. That's another thing that you can do in an A+ setup that you maybe wouldn't do if the setup's a B setup or a C setup. Having all these variables in your mind, but then really just letting the opportunity show up is such an important part of being aggressive in the right way. And especially for a newer trader, for somebody who's newer on our desk, you want to be aggressive when the moment shows up. And you want it to be controlled aggression because you want to give yourself cushion. You want to give yourself an opportunity, and you want to stay within your risk risk limits, so you're not putting yourself in a position where you're stopped out before the trade even happens, where you're down 80% of a daily stop before the real opportunity shows up. And so having that controlled aggression is something that is such an important thing to recognize, and then more important to review when you have an opportunity to do it. Because as we go through this trade, I may see things a little differently than you. If you talk about it with another trader on the desk, they may talk about something a little differently. But for you personally, if you're finding those moments to be aggressive in a very controlled way and finding ways to get better at that trade, you can then turn it into, like you said, you can make your month, you can make your year on a trade like that. We can never control the outcome of what happens, but we certainly can put ourselves in positions to let good things happen for us if we're aggressive in the right way. And so let's go through the trade a little more.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So here's my plan for the trade. I took a position pre-market at around, I think, $7.92. And my plan was to have a stop below the SMA, which was around $6.50.
Why would you use a stop at the SMA?
There weren't really many levels to go off of because there's been no activity in the last year on the stock. So I figured that I would base my stops off of and it adds off VWAP and
Yeah.
the SMA.
Which essentially gives you levels, right? And you're trading this in a momentum fashion. And if
Yeah.
it's holding below those levels, the momentum is potentially gone.
Yeah,
And
exactly.
so, yeah, okay.
So that's why I had my stop there. The plan was then, if we broke above the pre-market high, which we did right off the open, I would get filled in for my I would get filled in for 33% of my position, and then I was looking to make another ad at $10 if it got there, and then offload the full position at $12, and then my stop would just move below my original position.
And what percent of your daily stop were you risking in this? If you would have been fully in and it would have stopped you out.
So after my second stop, I was risking my fully day stop. This
Okay.
would be my only trade, and I'd be done for the day
Okay.
because of the fact that there were so many variables that made this an A+ setup
Okay.
for me.
Okay.
So
And within that, you can find ways to maybe avoid it being worst case scenario, right? Like you could hit out earlier if you needed to. You could manage your risk differently. That's maybe an area where we could improve on this. You know, A+, this is really kind of an A++ trade.
Yeah.
They don't happen very often, but it doesn't have to be I'm stopped out on the day entirely.
Yeah.
But because you always want to think, what's the worst case situation? And
Yeah.
worst case situation is you get all your ads, it drops out on you, you take a stop, and then it kind of rebids the whole thing.
Yeah. Well, so for my first initial position, I wouldn't be stopped out for the day.
Yep.
My second position, I could mitigate it so that I would have a small loss.
Yep.
But then my third one would, if I was to obviously hold it until
Yep.
the SMA, then I would probably stop out for the day.
Yeah.
But I probably wouldn't let it get to that point.
Yep,
So.
and that's part of that controlled aggression, right? You want to be aggressive. You want to get the size on when it's working. You want to be willing to use the risk that you're allocated, not more than the risk you're allocated, but the risk you're allocated. But you also want to have a plan to, if everything goes really wrong, which it can sometimes, make sure that you're staying within your risk levels. So that's good.
All right, so this isn't really relevant to the trade, but this is just sort of a bigger picture of what the Qs Inspire are doing right now. Obviously, we're bounced off, the Qs bounced off that 350 and are moving towards that 400 area.
Yeah.
We've just been, rallying.
Yeah.
Mega caps have just been breaking all-time highs. That's pretty much what that is. So this is just showing the sector strength of just the software industry because PHUN is a software company.
Okay.
And yeah, it's pretty strong. Right,
I mean, do you feel like this is relevant to this trade?
it's not relevant to the trade? It's just
Yeah.
some.
It's
Yeah.
baseline information, though,
Baseline
right?
information,
It's a
for
different
sure,
trade
yeah.
than if these are holding
Yeah.
at the lows
Yeah.
or something like that.
Yeah. All right. All right. So this is showcasing the sympathy strength. This is a chart of DWAC, and as you can see right here, there's just extremely strong volume, and right off the open, they have similar moves. We go up, touch 175, and I think around that time is when PHUN actually topped off at that 24 area, and then from there we halted to 13, which was pretty crazy.
I mean, the bigger context here is also what happened the day before. DWAC opened at 10.
Yeah.
It closed at 50 or 43 or something like that.
Yeah, we moved from 15 to around 50, the 50 area.
Yeah, and then it gapped up another almost 100%. And so you've got the sector, or kind of the sympathy, I guess, strength. So that's good to call out this chart.
Yeah, no, I was actually watching DWAC and it's 80, 70, 80, 90 in pre-market. I was like, do I go long?
Yeah.
It's pretty crazy.
But that's also something to figure out, because if your trade is the sympathies, which there's nothing wrong with trading the sympathies, they're some of the top traders on our desk are better at using the information and trading the sympathies, because in this case, fund was way more liquid than DWAC. You could control your risk in theory a little bit better than you could in DWAC. Plus it had its own kind of price action, particularly when DWAC went up and halted immediately. There was no price action that was occurring where fund was still trading.
Yeah.
So fund kind of ran independently on that. And so it's very interesting to see, you can kind of trade these a little differently, and you don't have to worry about, do I get involved in DWAC if you have something like fund,
Yeah.
and that's your go-to.
Exactly, and in my opinion, fund was a lot easier to trade than DWAC.
Yeah.
Just because it was, I mean, if you read the tape on it, it was constant buyers, just consistently
Yeah.
moving up.
Yeah. And DWAC was halted, so there was no tape to read.
Yeah,
It's
and
just halted
then we
that entire
unhalt,
time.
and then we just go straight to 175.
Yeah.
It's pretty.
Yeah.
I mean, like I said, the best thing with those is just keeping the average cost extremely low,
Yeah.
so that to avoid crazy halts
Yeah.
to the downside.
Yeah.
And this is just a 3-year chart of fun. As you can see, our high is 550, and that was
Super split adjusted.
a couple years back. And we were trading the day before I traded it was at 89 cents.
Yeah.
And you can see the volume right here. It's completely picked up. We were
Yep.
trading at 650 million volume at one point, and we were up 2,189% at 24.
Yeah. It's a good return for a day.
Yeah.
Okay.
All right. So this is just showcasing the fund chart.
Yeah, let's jump ahead to kind of the executions and the specifics of it, because I think that
Okay.
the intraday fundamentals are great, but let's jump ahead.
All right.
And I'm not trying to rush through these things, but I think for this trade specifically, a lot of the factors that we talk about in trades aren't as important. It's not that you shouldn't understand them, but they're just not as important, because that's not what is driving the stock right now.
Right. Yeah. And then these are just variables that checked off to make this a trade that I can take. All right, here we go. So this is managing the trade. So obviously we were gapped up 700%. My pre-market position was at 792 with a stop at around 650. And then instead of taking a position right after we broke, my second position was intended to be the PM high, but I got filled at around $11.
Was it just fast, or was
And it was pretty. It was a mix of. It was pretty quick. I was looking at other tickers,
Yeah.
and I also wanted to be up on the trade to mitigate risk, so
Yeah.
that I could my average price could be lowered.
Yeah.
So
Why were you looking at other tickers?
Well, I right when this happened, it just happened immediately.
Yeah.
I looked to the side and
Yeah,
I saw
yeah.
it pushing, and then all my attention was on fun. So my second fill was at 11, and then my plan was to sell the full position at $12. That was my plan.
Yeah.
And obviously the plan had to be changed because we were just moving up so quickly, and I wanted to catch the full move.
So you made an adjustment,
Yeah.
right?
Mhm.
And you in fact added more risk above what your plan was.
Yes. But I also moved my stop to $10.
Perfect. So you were aggressive, but you
So
were still controlling that.
because I wasn't going to
Yeah.
let it go from
Yep. That was going to be the next question, was if you're changing your plan, how are you? It's
Yeah.
fine to change your plan and be like, this is better than best case scenario for me.
Yeah.
But you can't say this is better than best case scenario for me, act on it, and then not adjust your risk profile.
Yeah.
Because if you don't adjust your risk profile and all of a sudden you're in from worse prices, you're putting yourself in potentially a very challenging position. But as long as you're adjusting your risk profile in the trade to go along with it, that affords you the opportunity to maintain that aggressive, this is working better than best case scenario, and also maintain your risk within the structured risk limits that you have.
Yeah. And normally if I was 1 year in, I would want to put on a ton of risk and really buy a ton of shares in this. But again, what you said, I need to keep my my risk management in control.
It has
keep,
to be.
And keep my plan
Yep.
accustomed to it.
There isn't like a question of like, yes, this is an A+ opportunity, and yes, you want to be as aggressive as possible, but you have to do it in a controlled fashion. You have to do it where you're doing the things that you talked about, where you're moving your stop up to mitigate risk if it turns into worst case situation. You're adjusting on the fly. You know, by not taking the profit at 12, you're inherently adding more risk to the trade.
Yeah.
And then you add more risk to the trade by buying more at 13.
Buying more.
So if you're not adjusting your risk profile in the trade, you're adding a ton of risk without, you know, obviously there's more upside potential, but like without updating your risk profile, you're just being aggressive. You're not controlling it.
Yeah.
But by updating your risk profile, by moving your stop up, by changing the way you're managing the trade and your expectations for the trade, and most importantly, by controlling your risk, you're using that controlled aggression to your advantage versus it being just a huge liability.
Yeah, exactly. And I did not think that I was going to do a third ad, but I did a third ad at, I believe it was at 12.77, and basically to control my risk, I moved my stop up another $1, so it was at $11
Perfect.
instead of. So now my stop was, which was at $6, is now at $11, and yeah.
Yep. And so you're dynamically adjusting to the opportunity while maintaining your controlled aggression.
Yes.
Which is you're only going to get that in very best case situations. You'll get the opportunity to do it, but the ability to do that is really important because you can control your aggression and you can give yourself more upside while making sure you're staying within your risk limits, staying inside your risk parameters, not going to put yourself in a position where Carlton or somebody else from the firm is going to be tapping you on the shoulder being like, dude, like what's going on? You know,
Yeah.
like if you're trading at home, like you're not putting yourself in a position where if this all of a sudden down halted for some reason, which, you know, we saw it went from 19 to $8 or something like that.
Yeah.
Like if you weren't controlling your risk that entire time, you're in a really tough spot.
Yeah, and the other thing is these you know, part of the reason I really just like day trading mega caps is because you're not going to get these halts and these crazy moves, and with these you need to be very careful with your position sizing and size accordingly.
Yep.
Because they can go against you really quickly.
Yeah.
And so I moved the stop up.
Yeah, I don't think you're going to run into a time where Apple's going to gap up 700% and then run another, what would you say, 2,000%?
It was up 2,184% on the day at $24.
I don't know Apple's going to do that, but, you know, that's pretty good. It's a good return for a day.
Yeah. And keep in mind, all my ads were 33% of my original starter size. Well, when I mean starter, that was my position size.
Yep.
So. And yeah, we halted again after my ad, and we halted up to 15. And at this point, I decided my profit target was going to be 20 because it's a psychological level, and I thought that a lot of people were going to take profits at that time, and I honestly was anticipating another halt, and I didn't want to be on the other side of it. So, but my plan was, if we did break the 20s and we moved up to 30, then I would look at revisiting and re-entering the trade. But my final ad, this is my fourth ad, was at 1872, and I was anticipating on offloading the full batch at 20. Moved my stop up to 16 or 15.
Okay.
Around the spot of my third ad.
Yeah.
And at that point, at around 1880, literally right after I executed on my fourth ad, I kind of just got worried about the halts because this is like after like 4 or 5 halts, and I saw DWAC was dumping, so I just decided to get out of the full position and revisit if we continued upwards.
I mean, at that point, it's pretty vertical too, right? Like
it's completely parabolic.
Yeah. So
I mean,
you know,
a red bar.
the risk reduction at that point is very warranted.
Yeah.
It's tough to say like you should have held any more because I think holding any more, you're dynamically adding so much risk to the trade of something like what happened occurring.
Well, part of the other thing was I kind of regretted the fourth ad as well.
Yeah.
Because I just
because if your goal is to get in from good prices, that's not a good price.
Yeah, it's not a good price. But looking back at it, my average was pretty low.
Yeah, your average was
my average was amazing.
Yeah.
So I think my average was like 1188.
Yep.
So I was still I mean, but
And you're adding almost, 80% higher
but
at 19?
yeah,
So, like,
but in my opinion, the fourth ad should have been around that 15 area after the halt, if there was going to be another ad,
yeah.
and then lowered the stop.
But to go back to your trade plan, right? Your trade plan is to get in from a good price and hold.
Yeah.
And if you're adding at 15, that's really,
Yeah.
if you started at 8 and you're adding at 15, it's up almost 100%. And you got to think about it like that aggression thing you want to have. And it's perfectly fine if you're adding, moving your stop, adding, moving your stop, adding, moving your stop. But this is a good one to review of should you maybe have just been bigger earlier? Could it have been that where you're like, I'm going to have 2 ads, but each ad's going to be a little bit bigger than if I had 3 ads or if I had 4 ads. That's just something that you can play with.
And I think a lot of ads is very difficult because you're not giving the stock as much room to run. So if I was to obviously do this trade again, I would have gone bigger in size off the open, and then maybe had one more ad into that 10-11 area, and then just rode it until I thought that we were going to go down. But, yeah.
I mean, because if you're in from a better average, then you're having to make less decisions on the fly.
Yeah, and I do think if this stock was trading before at a normal price, I mean that 550, that's very enticing to retail traders and Wall Street bets. It could have definitely gotten pumped, but we were at 80 cents, so it's like we're already up 189% on the day.
Yeah.
So.
No, it's good. I think it's a good trade. Let's really quickly go to your reasons to sell.
All right. Yeah. So the reasons in my favor to sell is if it hit the profit target, or
which it hit 12.
Yeah.
So the ability to adjust though, that's why I wanted to cover this last, right?
Yeah.
Because in an A+ setup, that controlled aggression that we're talking about today, it's important to update your potential reasons to sell if you get a better than best case situation, because you can go in with all the right preparation and say, I'm going to buy at 10, I'm going to sell at 12. But if you can recognize the opportunity on the tape, you can turn it into a bigger trade. It's truly recognizing the opportunity. It's not predicting it'll be there. It's recognizing it. If the stock has an aggressive uphalt, I would say the first uphalt was pretty aggressive. The second one that you got out right before was, I think, probably a very smart time to get out. But there was a good reason to be out. What I really liked was the fact that it went in your favor, and you didn't just say, all right, my stop is where it was. This stock went in your favor, and you kept moving the stop up with it, because that's an important thing in this trade, is making sure that you're managing your risk. You're staying aggressive, but you're controlling it the entire time that the stock is moving aggressively in your favor. So that's why I wanted to talk about this. I mean, I don't have anything else, but I think you did a very good job of staying with the trade, adjusting to what was offered, not predicting too much. Because if you would have taken a sale at 12 and it would have gone to 19, or it would have gone to 24, you're potentially opening yourself up to being more aggressive, trying to buy it back. And that might not work, right?
Yeah, which I wouldn't do at that price.
Yeah.
It'd be ridiculous.
Yeah. But it's good that you're creating reasons to sell, but also good that you're using your aggression in a very controlled way to move with the opportunity. So that's good. And I like the fact that since it doesn't have levels, you're actually anchoring those levels with your SMA and VWAP and some other things like that. So that's a good idea. Cool. I don't have anything else on this trade. It's a good trade. It's a really good trade. This trade, this would have made your month.
It was the best trade of my month. It was probably the top 5 biggest trades P&L wise I've had in my career so far. So I was just happy that this is the only trade that I've had where I've fully caught the complete move, pretty much.
Yeah.
So I was pretty happy about it.
Yeah, and it's good that you did that in a way that you weren't going to put yourself, so you can have a top 5 trade of your career without going over your daily stop, right? Without putting yourself in a position where you're risking more than you need to.
Yeah.
And that's really exciting. So good work on this.
Yeah, thank you.
Cool. Well, thanks.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.